Hi, and welcome to the Stockscores Market Minutes for August 27th, 2012. This week's topic, scanning the market for action. I will show you how I identify the market-beating stocks. A reminder to go to stockscores.com/newsletters.asp, the address that you see there on screen, to pick up my free weekly email newsletter. You should also subscribe to my YouTube channel so that you can be updated each time there are new videos uploaded. All right, scanning the market for action. Hot stocks trade with abnormal price and volume action. They start this abnormal activity early in the trend, and finding the stocks that are trading abnormally is a great way to find the stocks that have the ability to move faster than the market. Extracting profits from these stocks requires a way to find them quickly, and the Stockscores Market Scan tool is that way. It allows you to search the market for abnormal activity and quickly inspect the charts of the stocks found by the scan. I'm logged into Stockscores.com now, of course, as a member because it requires membership to use the Market Scan tool. And you can see that I have all of these filters here to choose from. Well, what I like to look for is stocks trading abnormally. Early in the day, I will simply look for abnormal volume and a certain number of trades. I might say 2,500 trades a day. Now volume is extrapolated, so if you do this market scan an hour after the market opens, it actually looks at how much volume has traded so far today and extrapolates that to the end of the day, so you don't have to always be updating your volume criteria as the day progresses. Now, since it's the end of the day, I can also look for abnormal price action, which is this filter here. I can look for stocks making an abnormal day up with abnormal volume and at least 2,500 trades a day. Clicking on the button, it will go through every stock that trades in North America, and today found 16 that meet those criteria. Now, of course, I could add in many other filters. You can develop your own strategies, or you can use my strategies. The point is, the Market Scan tool will filter through over 15,000 stocks in less than a second. We can then look at the charts of these stocks. I can select all and click on go, and I will now get little mini charts of all of the stocks that were having an abnormal day to the upside today with abnormal volume. And now it's simply a matter of applying basic technical analysis to determine whether these are good chart opportunities or not. And you can see that I can go through 10 stocks pretty quickly because they're all there on one page, and once I've done 10, I can click on next and go to the next page to look at the remainder. Now, some of these stocks will have been buyouts. This is an example here where KNXA has made a big gap up on abnormal volume today, but that is a merger, so it is not going to do much for us. However, here's one, Tiffany, that just simply had a good day on abnormal volume. Now, if you want to also look at the intraday chart of the stock, you can simply click on one of these fast links above the chart. So I could, for example, look at a 5-day chart of Tiffany, and there I can see how it behaved today relative to the past 5 days. Notice that the volume is very abnormal, and obviously the price action is abnormal. That's a really quick overview of the Market Scan tool. It does so much more, but if you are a trader of the market, it is an essential tool to utilize. Now, if you've been considering subscribing to this tool, go to stockscores.com and then go to the products menu. I encourage you to do this quickly because the pricing structure on Stockscores will change very soon. And I want to give my dedicated viewers of these videos a chance to get in on the advanced membership to Stockscores before the pricing structure changes. All right, let's get into the analysis. We have rising bottoms on the chart of the S&P 500. That's a sign that the buyers are in control. We have, however, hit resistance at the highs from April, and that is basically putting the top in on the market right now. What we've seen is the market speculating on quantitative easing round 3 from the US Fed, and now it's time for some proof. The market is no longer willing to speculate prices higher. It wants to see some action from the US Fed. So this is an optimistic chart, but one with a ceiling, one that needs something substantial to make that break through resistance. Next chart is that of the Toronto Stock Exchange 60 Index ETF, T.XIU. It broke its downward trend line this month and is beginning to build upward momentum. Not a lot of upside potential because it's been in this congested pattern for some time. This market will do well if there is stimulus because that should make the US dollar go down, should make commodity prices go higher, and of course with a commodity-based economy, the Canadian stock market should do well. The VIX has broken its downward trend line but is really a dead area right now. I think it broke its downward trend line because there are some people who are buying a little bit of insurance in case the US Fed does not come through. But there is still no real strong sign of fear in the market, and that is why the VIX remains in a low trading range. Now, money started to come back into the 20-year treasuries last week. We can see a little bit of a bounce back there. I continue to think that this is more likely to go lower than higher, but again, there are some people parking money into the safety of treasuries in case the US Fed does not come through. It's something of an insurance trade. US dollar is in a long-term upward trend, but a very volatile one. It shows that investors are very uncertain about what is going to happen with stimulative action and the US economy. We have two combating forces in the US dollar. If the US prints more money, then we should expect the US dollar to go lower. However, if Europe prints more money, if many other countries start printing more money, then it really comes down to who has the strongest economy. And right now, the US economy is one of the stronger ones in the world, even though it's far from strong. And so my thought is we're probably going to bounce around a lot in the US dollar, and that doesn't give great support for the argument that commodities will go higher. I think if the US economy continues to improve, that should help commodities, but I'm not so sure that the US dollar is going to plunge lower if there is quantitative easing. Now that's probably why gold is stalling at resistance at its downward trend line. It has risen up to that in the last couple of weeks. I expect it to get stuck here. And even if there is quantitative easing announced by the US Fed sometime between now and the end of September, I'm not so sure that we're going to see a big break of this downward trend line. Certainly it's possible, but I think that when you consider what's going on in the world overall, I'm not sure that a strong case can be made for gold yet. However, we ultimately watch the chart, and if that downward trend line is broken, then we have to consider that an optimistic signal. Oil has risen back from the dead, if you will. You know, in March and April, I would say that oil was artificially high simply because of concerns about supply coming out of Iran and the whole Middle East issues that were surrounding Iran. Well, when those problems kind of got solved, the world said, hey, the US economy, the world economy isn't all that great, and oil sold off quite sharply, taking us down to the lows of late June. Well, since then, we've been bouncing back from those lows. We've been regressing back up to the downward trend line, which we hit last week, and that is resistance for the market, and I expect that we're going to need some solid economic numbers, perhaps weakness in the US dollar, for this market to break that downward trend line. So I am neutral on US stocks, gold, and oil. I am somewhat optimistic on Canadian stocks. I think that they have lagged the US market and deserve to catch up a little bit, but I wouldn't call it a great looking market right now. You know, recent strength has been on speculation, taking prices up to resistance. Now it is time for the facts as the market waits for word of stimulative action by the US Fed and ECB. Look for the action to pick up as August closes, but be aware of September. It is notorious for being the worst month of the year for the stock market. We'll have a great week this week trading, and trade well.